Welcome to the Market Recap, your weekly digest of the biggest market stories from the past week. Join host Anna Serin and financial expert Bruce Campbell as they go beyond the headlines to deliver cutting-edge insights into news that move the market. Proudly presented by the Canadian Securities Exchange.
Hi, my name's Anna Serin. I'm Director of Listings Development with the Canadian Securities Exchange. You're joining us for yet another market recap here on Friday, November 18th. I am, of course, joined by my wonderful co-host, Bruce Campbell with StoneCastle Investment Management. Thank you for joining me, Bruce.
Yeah, it's good to be back and good to have you back. I can't believe it.
It's been a long time. James filled in for me while I was on my big trip to Australia. We will be doing some great content, so stay tuned on CSE TV for my trip in Australia. Lots of great stuff that came from it. And I've missed you, Bruce. I'm glad that we finally get to connect. We had Jordan a bunch last month. He is fantastic as always, but it's definitely nice to see you again.
Yeah, it's been a while, hasn't it?
It has been a while. We have lots of great stuff to talk about today, so we're going to jump right into it. We're going to talk about some more CPI numbers. We're going to get some good news about that. We're going to talk about some other technical data that has come in that potentially points in the direction of a recession in 2023. You're going to tell us why. We're going to talk about this week's movers and shakers in the market. And of course, we're going to talk about what happened with FTX. Most people will know the story, unless you live under a rock, about what happened with the cryptocurrency exchange. Big story there. And then, of course, we'll finish off with some CSE issuer news. So, Bruce, what happened with CPI numbers?
Yeah, so this is a little bit old news because we weren't on last week, in honor of Remembrance Day. But last Thursday, so the 10th, we saw the CPI number come out, very anticipated number coming out of the US, and it actually slowed more than the market was expecting. So the market was expecting a level of 7.9% on an annualized rate, and it was actually 7.7, which led to a huge move up. So if we look at the first chart here, this is just showing us the actual CPI, and you can see that it started to roll over now at that annualized 7.7%, which was a lot better than most people have expected. And then what that meant for the markets, which is really on the next chart here, is the markets had a huge day on the Thursday that number was announced, and then had some follow through on the Friday, and then also this past Monday. And this is just looking at the NASDAQ, and you can see that bar kind of up in the middle there on the 10th, just how big it was for that day. This is, of course, good news because we all have to deal with inflation in our lives every single day. It means that the rate of inflation is starting to moderate, but it's also good news for the market because the market's always thinking about what the Fed is doing and what's happening with interest rates. And so we saw initially, prior to this number coming out, the expectation from the market was that in the December meeting, they were going to raise interest rates by 75 basis points or 0.75%. And that's now come down to 0.5% or 50 basis points, which just helps the market get a little bit more stability and less worry about what higher interest rates means for the market.
And just to reiterate here, the reason that that's gone down is because we're raising interest rates to stave off inflation. The fact that the CPI number, which is our gauge on inflation, is finally starting to slow down and coming down to that 7.7. That means that we can start slowing down the rate increases that we're doing. Is that right?
Yeah, well, it just means that the rate of inflation is starting to show some decline. And so, maybe the Federal Reserve and the Bank of Canada don't have to be so aggressive with interest rates because we're starting to see that inflation come down. If it was still high, they would, keep their foot on that gas of increasing interest rates to try to slow things down and bring inflation under control.
Yeah, absolutely. All good news. Okay, we're going to talk about some numbers that came in that maybe point in the direction of a recession in 2023. So we're going to start off with the yield curve. So what happened with the yield curve?
Yeah, so with the Federal Reserve increasing interest rates, the concern is, like, historically, when you've increased interest rates, then what ends up happening is that slows the economy. So if you look at this first chart here, this is looking at the level of the spread between the 2-year US bond and the 10-year US bond. And normally, the longer you go out, the higher the rate is. But in this case, that's not what we're seeing. So the rate of the 2-year bond is actually higher than the rate of the 10-year bond. Why is that? Because they keep increasing interest rates. So that's the short end, the 2-year bond. At the same time, the market and investors are starting to worry about the fact that we're going into a slowing economy and they're moving to safety. And so they're buying the 10-year bond, which is pushing that yield down. So if you look on this chart, there's a line that goes across 0. That's considered where the rate of the 10-year and the 2-year are the same. And now it's into negative territory, meaning that the 2-year is a higher rate than the 10-year. When this has happened in the past, this has been a real strong predictor of recessions. Doesn't mean that every single time it's happened, there's been a recession, but it's got really high predictability power for that happening. So the market's now concerned about a recession. If we look at the next chart, this is looking at the LEI number, which actually was released today. And you can see there on the side where the latest data is, it's below that little red line. And that red line is indicating recession warning. And so the LEI, when they released their data today, they talked about the fact of why the number had dropped down below that level. And they were saying that either they feel we're in a recession or we're about to be in a recession. And they're expecting that the recession should end sometime in the back half of 2023. So that's kind of all the details on the recession.
Well, I think we're prepared for entering a recession if we're not already in one. So this isn't necessarily new news, but hopefully we get through it as quickly as possible, right?
Yeah, but the point that we wanted to make was just looking at kind of the next chart is that, even while there's all this talk of recession, the interesting thing is that this is looking at the NASDAQ, and there's two different parts to this chart. So the top part of the chart is just looking at the price level of the NASDAQ itself. The bottom part is looking at a momentum indicator that we use. And so when you see the one line cross above the other line, that's showing positive momentum. And we've actually seen that just happen. And this is for the TSX or for the NASDAQ. We also have a chart here for the New York Stock Exchange Composite, and the same thing for the TSX. And you can see that all three indices, and we just brought 3 here, we could have brought 20, are showing that there's actually a momentum increasing in those indices, which to us leads us to believe that the market has actually anticipated a lot of this recession is already built in. Things always change in the investment market, and that's what makes them so exciting, is that there's constantly change happening. But as of right now, it looks like, perhaps the market has actually already started to anticipate and factor in the slowdown / recession that we're going to see. Of course, if it got really severe and was going to be deeper than the market expected, then we would see that, rollover in momentum, and we'd see the market start to drop again. But right now, that doesn't seem to be the case.
Yeah. So I one of my questions is, when was the last big recession, would you say? Was it 2008 or 2012? When was the last big downturn?
Well, we actually saw official recession in 2020. So during COVID, it was one of the shortest on history. Was one that we saw. Yeah. I mean, so if you actually go back and look, that was there. And interestingly enough, most people think, well, COVID kind of came out of nowhere, which it did. But interestingly enough, when we talked about the inverted yield curve, the yield curve actually did invert earlier. Prior to that, it was late 2018, early 2019 that the yield curve inverted. So, when we talk about the predictability power of the yield curve, it was interesting that it was able to predict a recession, even though it was, probably one of the shortest on history.
Well, I was just commenting on the fact that you mentioned that there's kind of this built-in pricing. I think our access to information versus the last kind of big downturn is so much faster. So the markets are able to build that into the markets at a faster pace as well, right?
It certainly seems that way, that there's more, kind of the access to information is a lot quicker nowadays. So that's where it appears to be.
Yeah. Absolutely. Like access to Taylor Swift tickets. I mean, that went fast, man.
You had to jump on those quick and have your credit card ready with a big spending limit.
Okay, so let's talk about this week's movers. There was a bunch that was moving, some up, some down. What did we see, Bruce?
Well, probably the biggest thing that we were kind of most surprised to see was energy prices, and you've seen the commodity price pull off quite a bit. The price of oil at one point in time today was down close to 10% on the week, which again will transpire nicely into slowing inflation data. I mean, we've already seen, I just look here where we are. We've seen, gasoline drop close to 50 cents a liter, and with gasoline lower. Or with oil lower, it could mean that gasoline goes even lower. And that's, certainly one input to inflation. So that was one of the sectors that we were a little bit surprised to see, kind of pull back to the degree that it has. It looks like the supply demand picture for energy still tends to be fairly balanced here right now. So, we've seen quite a drop off in the price of oil.
Absolutely. And then materials and tech.
Yeah, we've seen some interesting things happening on the materials and tech side. So, part of what has happened is the US dollar has been so strong for most of this year, and going back a couple of weeks ago now started to weaken. When we saw the CPI number come out, it really dropped, and both tech and materials tend to be inversely correlated to what happens with the dollar. So as the dollars come down, both of those have moved up. So we've seen, fairly strong performance from, some of the gold miners and base metal producers, both in Canada and the US. And then we've also seen some tech, not all tech, but, certainly you've seen select tech that's done really well. There's been some semiconductor manufacturers that have done really well. And then some of the other big issuers. And in Canada here, Shopify's, the really big tech behemoth for the Canadian index. And it's done fairly well here over the last couple of weeks.
Awesome. I love it. Okay, we're going to talk about FTX. So this was quite the story. So FTX is the abbreviation for the Futures Exchange. It's a cryptocurrency trading firm that was co-founded in 2019 by Sam Bankman-Fried and Gary Wang. It was once the largest crypto exchange in the world. I think the other one is called I can't remember what it's called. Binance. Binance is the other big one. It had some troubles this week. What happened?
Yeah, I mean, this is going to be one of those things that probably ends up being a movie. I would suspect that, Michael Lewis will probably write a book on it, and then you'll see a movie. It looks like it's just a massive fraud, or just complete and total lack of controls. One of the two or both. And, we kind of keep learning each day more and more about this, but effectively, the company's gone from having, a $32 billion market cap to zero in kind of no time at all. There's been, a potential takeover offer that came in and then got removed. And, now you've had, lots of celebrities and actors, athletes who have been all involved and implicated. There's going to be, probably a whole lot of people in Congress who are, demanding to have inquiries as to what's happened here. And there's been some big investment people who have been affected. So, Ontario Teachers was one that's announced that they're writing down their position down to zero. It's a very small part of their portfolio. So it'll probably have, almost no impact on their performance, but it's still, it was multiple millions of dollars that they lost or are writing down. So
it was 95 million. Now, 95 million for the Ontario Teachers Pension Plan is pretty small. Ontario Teachers Pension Plan, for those that don't know, is probably one of the largest pension funds in Canada. It's massive, isn't it? It's huge. So 95 million is pretty small. And they kind of said, look, we have to have some exposure to some of these things. It was a very small exposure. But it'll definitely be interesting. And one thing too, to remind people of is, within the capital markets, we're bound by securities regulators. There's a lot of protectionism that's put into place. There's a lot of disclosure requirements. There's a lot of financial reporting requirements. These crypto exchanges aren't bound by those same requirements as we are in the capital markets. And I think maybe this was inevitable, maybe it wasn't, but it definitely will force any future crypto exchanges to maybe start getting regulated, don't you think?
Yeah, you'll definitely see some regulation around this for sure. That doesn't happen quickly, but it will happen for sure.
Yeah. So one thing I thought was interesting is, so I guess what happened is they were going to sell to Binance. Binance started doing their due diligence, and I think that's when things started to crumble. When they pulled out of the potential buyout, is when people really started racing to it. So it's kind of like going back to some of the downturns we've seen where people are literally running to the bank to pull their cash out. And then they're also saying that there's potential hacking that happened, or was it insiders that were in there? So it seems like it's a big mess. I thought this was interesting. I didn't realize this, but there were some major sports deals. There was really a pile-on of institutional investors, as well as kind of these mega sports deals. There was a stadium that was being built in Miami that was going to be called the FTX Stadium. That has been pulled. Formula One race cars with Mercedes, the logos are being pulled off that. Obviously, we're going to see some major ripple effect. I think Bitcoin lost more than a quarter of its value, which is huge. I don't know what that number is, but this will be a big shakeup for the crypto market, don't you think?
Yeah, it sure will. And one of the things it will do is really, sort of shake people's confidence in Bitcoin and where they're invested, and the exchanges and the regulations all around it. So, it's obviously a very unfortunate circumstance. What it will lead to, though, is probably better regulation of that market,
which I think is very much needed. All right, enough about them. I'm sure we'll be watching that story, and I can't wait for the Apple TV series, or I don't know who will get it. Maybe Netflix will get it, but that'll come out soon, I'm sure. Okay, CSE issuer news, my favorite part of the show. We're going to talk today about BioHarvest Sciences. I thought, first of all, I always love to see nice, big, fat financings. They just closed their second tranche of a private placement, which was they had to close at an additional tranche of $3 million oversubscribed. They ended up raising close to $9.5 million, which is great to see that kind of financing, especially in the sector in the markets that we're in. They're based out of Vancouver. BioHarvest Sciences is the developer and exclusive owner of the proprietary and patent-protected biofarming technology. It's the first and only industrial-scale plant cell technology capable of producing the active plant ingredients without the necessity to grow the plant itself. What do you think about this sector, Bruce?
Yeah, I mean, it's one of those areas that is developing and could be very revolutionary as far as agriculture goes, right?
Very cool. Well, congratulations to BioHarvest Sciences. Oversubscribed placement by over a third is pretty impressive. Well done to you guys. I'm sure it will go to good use. What should we think about going into next week, Bruce?
Yeah, I mean, the big thing is, kind of the follow through between, that yield curve inversion, where we're headed with interest rate increases, and then taking a look and to see how the markets react to all that. It still continues to be really volatile, and we're at some, again, sort of critical levels that the markets hit a couple of times that we're trying to figure out whether or not it's going to get that escape velocity to move back through those levels, or if it's going to hit that kind of ceiling and then start the next down leg, and this is just another bear market bounce.
Yeah, absolutely. Well, listen, I hope you have a wonderful weekend. It's so great to see your face again and chat with you. I look forward to seeing you next week.
Yeah, have a great weekend.
You too, Bruce.